Hey, good morning. It is Wednesday, EIA Day, and also Fed Member Day. There's more Fed members speaking than there are Fed members. I think everybody's got to be jawboning up the interest rate hike in December, which I'm sure is going to be the time that they pull the trigger. Um, I am using this time today to look at my trading strategies and decide how I can slice and dice these distribution curves to make them work better with my profile trading. The standard 70% value area just leaves a lot to be desired. And I think that I've been missing a lot of trades simply because I've not set my charts up the way that I need to. So I want to go back to the drawing board and start from the basics, which is just look at your bar direction first. Where is it going? And you can do that with a Renko bar, a larger Renko bar. And if you just trade in that direction on the lower time frame with your direction guide, which is your higher time frame trend with your daily close current open, um, you're going to find yourself way ahead of the eight ball on trading because you've got your direction right and you can just start focusing on nailing those entries in that direction. And more often than not, even if you get knocked down on one with a small stop, you're going to find an entry that will take you up and out continued in this area. Also, just open your eyes and look at your chart. If momentum is dropping, momentum is in threes often on the way I have my momentum, uh, which this is just a momentum indicator that I have smoothed with an EMA, double smooth by William Blau. If it's dropping, you've got divergence and you know that this upthrust is coming to an end. So you can come to your daily or your weekly and look for a level or use Fibonacci if there are no above levels for a turning point. But you see that our momentum has dropped greatly, so it's looking for a place to turn around, and this could be the double top right here that we're watching right now. This could be a double top very well, and we have already found the top of the market. So also just look at your composite profile, and you can see that the high volume areas are diminishing. So you know that the move is probably over, or if it's not over, it's going to be over pretty soon. So just visualize your chart and see where you are. That's very easy. I've taken 30-minute profiles, mini profiles, and set my charts up a couple of ways. I've diminished my value areas instead of the 70%, taking into consideration customizing the curve to provide a better opportunity to take advantage of market movements, and really focusing on the area that provides the point of control, the strength, and then taking the opportunity when it leaves this area and not the full 70% value area. And I'm finding that this works very well. Thank you, Tom Alexander, for mentioning this in one of your webinars where I picked this information up from. It absolutely works, and I love it. So again, these webinars that you listen to, you get these nuggets of information from, and it really opened my eyes to change the way that I'm looking at dynamic value and changing it so that I can get a repeatable pattern using these areas um, and focusing on the areas that provide the turning points inside this dynamic point of control area and use that as your launching pad for these trades and not wait for a full exit, but I can get in the trade much earlier and have a much tighter stop. And bringing it down to the lower time frame even further, you can see inside the bar. Let me come over to yesterday, and you can see this move in NASDAQ where if you get a reversal out of this dynamic support resistance with trend, I mean, don't wait for an invitation, take the trade. You don't need to be watching anything else. That's your ticket to take the trade. They don't always work out. This came back to the value area. That's okay. Nothing in life is guaranteed, but the second one sure did work. And I'll tell you a trick on this also. You don't have to wait for price to stop you out. When you get a down, when you have a high momentum, like right here, you can measure the tops of your momentum, and you're buying on the top of momentum out of an area, that's not a great idea. That's probably not, I mean, sometimes it works, but I'm saying the better place to buy is after the retracement, when you can get back in on an up move, when momentum has already done its retracement and is coming back in for the up thrust. These are the areas that I'm watching for on my chart. If I'm in an up move, I'm watching the momentum more than I'm watching the price bar, because I want to have a flush back to the zero line and then a new launching pad. So use your momentum, use your slope, use dynamic support resistance with your value areas, and just take the trades. I'm trying to find a repeatable pattern, and I'm finding that when you stack up your if-then conditions in the right manner, you can get a repeatable signal that will become profitable. And those repeatable patterns are if weekly, daily, 60, 15 are in the same direction, if price is this, and if momentum is this, then execute. That's what you need for Bloodhound. You just run your if-then scenarios, stack them up, and then your entry trigger can either be a bar direction change, and that's your support resistance, red green for long, green red for short, or just breaking out of an area. Either, that can be a moving average, price over a moving average, or price over a value area, or price crossing an area, coming back to an area, and then taking off again. Touch, retouch, cross, recross, whatever you want to call it. You can set this up any way you want. So if you guys would like to know more about what I'm doing, come on over to the website and book an appointment. for strategy development template design services, and I'll be glad to work with you and help you set up a custom Bloodhound template. Thank you so much.